Welcome, everyone. My name is Will Cheng. I'm the investment specialist for Geneva Benefits Group, and I'm joined here today with Jani Venter, who is the managing director and DC head of real estate solutions. Jani, thanks for joining us today. Appreciate that you take the time to speak to us.
Thank you for having me, Will.
We invited Jani here as she heads up, if you didn't realize, a real estate allocation within our portfolio and target date funds, and she's the expert. So we wanted to have her share her thoughts about the value add of a private real estate allocation within your target date funds. But before we do that, maybe Jani, if you could share a little bit about your background for our listeners and viewers. Now, how long have you been in the industry? How long have you been working with private assets and private real estate in particular?
Sure. Thank you, Will. I think it's hard to believe now that it's more than 20 years that I've had experience in private U.S. commercial real estate. I think what really adds value to our clients is that my background is multifaceted. When I started my career, it was in consulting. I was working with clients like Geneva, helping them build their real estate portfolios and looking at the value that real estate offers in their portfolios. And then in 2017, I moved to JP Morgan as their first 100% focused defined contribution real estate employee. So for the past decade, I have really focused on leading client and fund strategy within our DC real estate solutions. And it's been incredible to see how the market evolves and the value that real estate delivers in our client portfolios.
Thanks, John. And is it true that most off-the-shelf target date funds do not have an allocation to private assets or private real estate? And so that in some sense, since we have customized target date funds, is a unique value add. Is that correct to say?
That is absolutely correct. Because you have a custom target date fund, it gives you the ability to pick some of the asset classes that can add more value and then pick the managers that you see as best in class to deliver the characteristics within those portfolios.
Yeah, thanks for sharing that. And for our listeners and for those who may not be familiar with this particular asset class, can you define what exactly is private real estate versus a REIT, for example, or how would you define that particular allocation asset class?
I would say if we're going to have a conversation about private real estate, it goes hand in hand with the conversation about public REITs, because it is not one or the other. At the end of the day, the value for participants and for DC investors is a combination, but more private real estate. And when we talk about private real estate, these are investments in bricks and mortar assets, buildings that you see around you every day. The characteristics in those buildings, they move differently to stocks and bonds. Whereas if you look at publicly traded REITs, they are wrapped and they trade on public exchanges. So they behave the same way as stocks, and public real estate and private real estate have different characteristics, so they play different roles in portfolio construction. The private real estate gives you the stability and the diversification and the downside protection that you want for your participants, whereas the public REITs gives you daily liquidity so that you can rebalance and pay out participant flows.
Right.
So together in a portfolio, they really give you exposure to the full investable real estate universe, which is the value that you're getting today.
And if I could ask a follow-up question about that, along with the insight there, could you maybe share a little bit more, dig a little bit deeper on the added value of private real estate to the portfolio? Certainly a vol dampener. It sounds like diversification benefits. Maybe more specifically, share how does historically private real estate behave on a correlation basis with fixed income and equity?
Absolutely. And I think that's a really important point, because if you think back to the 1970s when defined benefit plans wanted to reduce their stock exposure, they stopped at core real estate because it behaves differently. Let me give you an example. In 2022, when you have an equities and a fixed income portfolio, both of those moved together for a participant and they were down 20%. But if you had an allocation or a slice in your portfolio to private real estate, that remained positive. So it gave you downside protection in the portfolio, protecting the value of the participants' investments during that time period. And every time stocks decline and move back up, a participant loses value. So an allocation to real estate helps protect that downside so that compounding over time gives them a higher balance at retirement. And that's the goal of real estate. So if you think back over time, private real estate has only been negative in 4 time periods since the 1970s. Early 90s, mid 2000s, 2020, 23, and 24. Compare that to the volatility of a stock portfolio. That's the value that you're getting from real estate.
Great. Thanks for sharing that so eloquently. If we could maybe dig deeper into sort of the portfolio itself in terms of commercial properties, or even broadly speaking, what type of properties are we really talking about in private real estate? I think some people think it's similar to residential where they're just flipping properties or houses, but that's completely different from what commercial real estate. So what kind of properties or allocations to subsectors do we see in your strategy? And how does that lead to a particular return generation?
I think that's important that you pointed out that it's not a short-term hold. The first thing that I would say is we have a large portfolio, and that portfolio allows us to invest in a diverse range of property types. It's a long-term hold. So think about the main four food groups: office, retail, residential, and industrial. That is really where we live, where we hang out, where we work, and we all want our Amazon package the next day.
That's right.
So those are the drivers of demand for those four main food groups. In addition, there's a growing exposure within our portfolio and within real estate to alternative or extended sectors. To your point, single-family rentals. There is such a demand for housing in the U.S. that we, for example, build groups of 150 homes that all look the same, that are for rent because we're addressing a demand in the market. And then that allows us to build income in the portfolio, which gets to your second question, how do we generate returns?
Right.
So the first thing that I would say is that the type of real estate strategy that is helpful in a target date fund is a core beta strategy. Now, what do I mean by that? It is a low risk strategy that over the long term looks to give you 7 to 8% total return. And the majority of that, 2/3, is income. So we invest in these buildings, we hold them long term, we increase the rent slowly, and we build value through net operating income growth on the one hand. And on the other hand, we build value through appreciation. We might do a little bit of development, repositioning, but overall you want that stable, mostly positive total return that comes from diverse sources of investment across the four food groups and alternative sectors.
Yeah, thanks for sharing that. And I think that also highlights why it does have characteristics like equity or fixed income broadly, but still acts very differently. So it's such a value add. If we could switch gears a little bit, because you've very clearly stated the strategy of the portfolio, but we all know that really the strategy can only go as far as some degree to the level of the manager or the team itself. Could you describe the team that manages this strategy for participants? What are their unique value add, the positive characteristics and attributes, or what is the team like in general?
Absolutely. And especially when you get to private assets, I think it's very important to understand the quality of the manager, the quality of the team. What do they bring to the value of the portfolio beyond just the asset class that you've selected? So today, the value that we bring to the table is that the scale of our platform allows us to have a broad range of relationships with local partners on the ground. We understand the real estate. That allows us to invest accretively. That differentiates us from other managers. So it's the scale of our team, it's the depth of their experience, because at the end of the day, the way we add value is by investing in the highest quality assets. And that is the hallmark of our fund that we hold all the way through.
Yeah, thanks for sharing. I mean, certainly the expertise and the partnerships, but the name of JP Morgan itself probably allows a certain relationship and partnership with different real estate investors. And if we could perhaps end on this last question, given just sort of the unprecedented markets since 2020 and COVID, what is your general outlook on private real estate today? Are you excited for what's to come? How is pricing looking? And other thoughts that you may want to add to that?
I think it's very timely to have that conversation, because think about the fact that your equity and fixed income portfolio repriced in 2022. They're 3 years into recovery. So their valuations are high. Real estate repriced a little later, which is part of the diversification benefits. But today we are only 6 quarters into a recovery. So we're at the start of a recovery. Your values have moved down 20%. Capital markets and debt markets have stabilized. We're now seeing debt that's available for all the types of real estate again. real estate fundamentals remain positive. So the view of the slice that you have allocated to private real estate within your overall custom target date fund is very positive.
That's good.
Also about the fact that in the US, I think the first half of this year was the first time in history that capital expenditure on technology was higher than consumer contribution. So you can see that the focus is on AI, on defense, and all of these demand drivers are filtering through into real estate, which is further supporting our positive view and returns going forward.
Well, it sounds like it's an exciting time to be in private real estate. So
Indeed,
glad
it
that we have you and JP Morgan and your team leading this strategy for us. And for our participants, recognize that if you are in one of our target date funds, you have an exposure allocation to the strategy that we discussed here. So we're excited for this. And Jani, thanks so much for your time and sharing your insights and expertise with us. Glad that you're able to join us.
Thanks for having me, Will.
And for participants and listeners, if there are any other questions that you may have about your financial planning or the products that we offer, we're here to serve you. So please reach out. You can get our contact information from genevabenefits.org. And we look forward to hearing from you. Thanks for joining us.